Hello everyone, I am Pranav Tripathi, and today I'm going to tell you about the role of microfinance in social sustainability. First of all, microfinance refers to the provision of small scale financial services, which includes microcredit, savings, insurance, and remittances facilities to low income individuals who are excluded from the formal banking system. These individuals usually lack collateral, stable income, or access to traditional banks. And social sustainability is a key pillar of sustainable development. It focuses on improving quality of life, reducing inequality, ensuring social justice, and promoting inclusive growth. Social sustainability aims to ensure that development benefits are shared fairly among all the sections of society and are maintained in the long run. And microfinance plays a crucial role in social sustainability because it directly targets the economically and socially vulnerable section of society. It not only improves income level but also strengthens social culture, social structures, empowers women, and promotes inclusion. The role of microfinance in social sustainability can be understood under three major dimensions. First, First, it is poverty alleviation. Second, women empowerment. And second and third is social inclusion. Now, we are going to talk about poverty alleviation. And the first topic is access to credit and savings. Poverty alleviation is the primary objective of microfinance. One of the biggest problems faced by the poor household is the lack of access to formal financial institutions. And commercial banks generally require collateral, regular income, and credit history, which poor individuals do not possess. Microfinance institutions bridge this gap by providing small, affordable loans without strict collateral requirement. These loans are used to start or expand income generating activities such as small retail shops, vegetable vending, tailoring, dairy farming, handicrafts, or home based businesses. Though through these activities, borrowers earn a stable source of income, which helps them to meet their daily needs, improve living standards, and reduce dependence on the daily wage labor. Over time, increased income contributes to the asset creation, to the to the asset creation and economic stability. In addition to credit, microfinance strongly promotes saving habits. Even small saving encourage financial discipline and future planning. Savings helps household to manage their routine expenses, pay school fees, and prepare for emergencies. Access to credit and saving also reduces reliance on informal money lenders who often charges extremely high interest rates. By avoiding exploitative lending practices, microfinance prevent debt traps, and support gradual poverty reduction. Now we are going to talk about risk mitigation. Poor households face high levels of financial vulnerability. A single adverse event such as illness, accident, crop failure, job loss, or natural disaster can push them back into extreme poverty. Microfinance plays a significant role in risk mitigating by providing financial support during emergencies. Emergency loans help families handle urgent expenses such as medical treatment, repairs, or education cost without selling assets or discontinuing schooling. Many microfinance institutions also offer micro insurance products, including health insurance, life insurance, and including health insurance, life insurance, livestock insurance, and crop insurance. These products protects household from severe financial shocks and income loss. Flexible repayment schedules, group lending system, and peer support reduce repayment stress during difficult times. As a result, microfinance improve household resilience and prevents poverty relapse and supports long-term economic security. Now, talking about women empowerment. And the first point is control over resources. Women empowerment is a critical component of social sustainability, and microfinance has played a transformative role in this area. In many low-income households, women traditionally have limited access to financial resources and economic opportunities. Microfinance institutions often prioritize women borrowers, providing loan directly in their names. This enables women to gain control over the financial resources, which includes income, savings, and credit utilization with access to microfinance. Women start small businesses too or income generating activities, leading to economic independence. So, control over resources improves women's self confidence, dignity, and social status within the household and community. Women who earn income are more respected and have a stronger voice in the family matters. Women tend to allocate income towards children's education, healthcare, nutrition, resulting in better human development outcomes. Thus, microfinance empower women economically while improving overall family welfare. And now about the decision making power. So, beyond economic independence, microfinance significantly enhances women's decision making power. When women contribute financially to the household income, they gain influence over decisions related to spending, savings, investments, and education and healthcare as well. This leads to more balanced and inclusive household decision making. So, microfinance programs often operate through self-help groups or joint liability groups. These groups encourages women to participate in meeting, manage funds, maintain records, and take leadership roles. Through group participation, women develop leadership skills, communication ability, and social awareness. They gain the exposure to financial literacy, health awareness, and legal rights. As a woman, as a woman, if they become confident if they become a confident decision makers, they also take active roles in community development activities. This strengthens gender equality and promotes long-term social sustainability. Now, we are going to talk about social inclusion of marginalized groups and community. So, social inclusion is a core objective of social sustainability. Microfinance plays an important role in including marginalized and excluded groups in the economic system. Many sections of the society, such as rural poor, informal workers, minorities, and economically backward communities, are excluded from traditional banking. Microfinance institution actively targets these groups and provide financial services without discrimination. By offering inclusive financial access, microfinance reduces social inequality and ensures equal opportunities. Marginalized groups gain confidence, financial independence, and social recognition. Financial inclusion also enables these groups to participate in mainstream economic activities, improving livelihood and social mobility. Now, about the community participation. Microfinance also strengthens community participation and social cohesion through group-based lending models. Borrowers from groups that collectively take responsibility for loan payment. This system promotes trust, cooperation, and mutual accountability. Um, and regular group meetings provide platform to discuss financial issues as well as social topics such as education, health, sanitation, and women's rights. These interactions encourage collective learning and problem solving. And community participation leads to stronger social networks, improved cooperation, and sustainable community development. Microfinance thus contributes to social harmony and collective growth. Um, so, in conclusion, microfinance plays a vital role in promoting social sustainability by alleviating poverty, uh, empowering women, and fostering social inclusion. Through access to credit and savings, risk mitigation, enhanced decision making power, and community participation, uh, microfinance creates long lasting social and economic benefits. By promoting inclusive growth and strengthening social structures, uh, microfinance contributes to building a more equitable, resilient, and sustainable society. Thank you.